Why is OCTA, symbol OCTA, making waves in the cybersecurity stock market? In this comprehensive breakdown, we'll explore the company's current standing, financial health, and what the future might hold. Stick around for an in-depth analysis that goes beyond the surface. OCTA, with 18,400 customers, is a notable player in the cybersecurity field. However, it's acknowledged as a smaller fish in a vast pond, especially when compared to industry giants like Palo Alto Networks, Fortinet, CrowdStrike, and Zscaler. The company boasts over $3 billion in remaining performance obligations, RPOs, and a robust 115% dollar-based net retention rate, providing a glimpse into its market presence. In terms of revenue growth, OCTA exhibits strength, projecting $2.2 billion for fiscal year 2024. This places it on a similar scale as CrowdStrike, but both fall short of the considerable revenues generated by Fortinet. The cybersecurity landscape is dynamic, and OCTA competes with an 18,400-strong customer base against the dominating quartet in the industry. Moving to financials, OCTA's Q2 fiscal year 24 highlights showcase a 23% YoY revenue growth, with subscription revenue up by 24%. Non-GAAP gross margins stand at an impressive 79 to 80%, while free cash flow margins hover around 8.7%. The company maintains over 4,200 customers with contracts exceeding $100,000, indicating a stable customer base. However, despite revenue growth, operating losses persist, painting a picture of the company still finding its way to profitability. The revenue outlook for OCTA anticipates $558 to $560 million in the third quarter of fiscal year 24. Non-GAAP operating income is projected to be $53 to $55 million, reflecting a 10% margin. With 180 million shares outstanding, the non-GAAP diluted earnings per share are estimated to be 29 to 30 cents. These figures hint at a shift toward profitability, albeit with a cautious margin. However, the financial journey of OCTA hasn't been all rosy. With a net loss of $626 million and negative diluted earnings per share at $3, the company has struggled to turn a profit. Shares outstanding have soared from 16 million a decade ago to a staggering 260 million, indicating significant dilution. Despite these challenges, OCTA maintains a positive gross profit margin of 72%. The valuation of OCTA, when compared to its peers like CrowdStrike, Zscaler, and Palo Alto Networks, seems reasonable but still on the higher side. The company sits on a robust balance sheet with $2.1 billion in cash and $1.57 billion in debt, resulting in a negative net debt situation. The overall financial health is further underscored by a strong current and quick ratio, with a debt-to-free cash flow ratio under 5. When projecting future earnings, analysts anticipate a growth rate of over 34.5% for the next decade. Utilizing a 30 times PE multiple, a 12% discount rate, a 10% margin of safety, and accounting for a 2% share dilution, the intrinsic value of OCTA is estimated to be around $70. This valuation places it in line with the current market price, suggesting a fair valuation. For a more optimistic scenario, with a 30% growth rate, the intrinsic value could reach $3,030. However, this projection relies on non-GAAP earnings, which might not present the full picture. It's crucial to note that the company has been consistently generating operating losses, and true profitability on a GAAP basis remains a challenge. OCTA's stock performance has been relatively flat, trading within a range of $67 to $91. Despite a significant rebound from its all-time lows, the stock seems to be consolidating. Support is evident at $67, while resistance is around $91. The company's financial outlook and potential for profitability might be the catalysts for a breakout or further consolidation. In conclusion, OCTA presents an intriguing case in the cybersecurity sector. Its growth trajectory, financial health, and potential for profitability make it an attractive prospect. However, investors must tread cautiously, considering the historical operating losses and the company's position among industry leaders. The stock's current valuation appears fair, but the road to sustained profitability may influence its long-term performance. Everyday Americans, what are your thoughts on OCTA's position in the cybersecurity market? Leave your comments below. Disclaimer: the analysis provided is for informational purposes only and does not constitute financial advice. Always conduct thorough research and consult with a financial advisor before making investment decisions.
Before you go, help us by smashing that YouTube like button. And subscribe to this channel, so you won't miss any of our videos. This shows YouTube algorithm that you value our information. And it helps us spread the message. Sharing is caring.